The Australian dollar is broadly lower today following Q2 CPI figures because traders have scaled back bets of an imminent hike from the RBA. Now, you can't really say that the figures were soft because trimmed mean is still 3.6%, well above the 2 to 3% target. But traders were toying with the idea of another hike in August. And I think that's now been taken off the table. And we could even argue that possibly there's less of a case for them to hike at all this cycle. That's not a guarantee, though, at the moment, but that's certainly the narrative that's being thrown around. And I think that today's figures, whilst they remain elevated but not as hot as feared, it means the RBA are likely to be delivering a hawkish bias, but ultimately a hawkish hold. Now, before we get into the Aussie dollar, I do want to look at market position, but it's quite relevant, particularly on this left-hand chart here. We've got 4 consecutive bullish weeks, but it really didn't recover much. In fact, it didn't even fully recoup that 1 week's loss over that 4-week period. Quite a shooting star candle as well. Mostly that was driven by reduction of longs initially, but in recent weeks, we actually saw shorts rising as well. So you've got prices rising while shorts were rising, and they've stood their ground. Now we've got potential momentum reversal here. Perhaps we'll be looking at more of a pullback on the Aussie. And keep in mind, we've got the FOMC meeting later today. The Fed are likely to keep interest rates unchanged, but they may well be giving a slightly hawkish bias, and that could see a further pullback in the Aussie. And looking through on the Aussie dollar, interesting one here that the major support level nearby really is the 200-day average. And it really made hard work of breaking above 70 cents in recent days. Momentum's clearly turned lower against it. It's just one of these situations there where chasing the move might not be that preferable. But maybe if we get a pullback maybe towards the 10, 20-day averages, perhaps it could move lower. Of course, if we got a hawkish meeting within the next 12 hours, that could see potentially the Aussie moving lower towards that 200-day average. Now, if you look on the 1 hour chart, I really like that the sell-off perfectly stalled almost at that high volume node. It's trying to recover now above the weekly S1. Ultimately, given the trend is now moving lower, I think bears will be looking to fade into resistance levels such as the weekly S1, maybe this low. Note that you've also got the weekly pivot point near the monthly pivot point, that tight zone, and 70 cents above. So ultimately, I think it's over the near term, at least fading into rallies is preferable for bears, at least down towards this 200-day average, possibly towards 69 cents. Now, beyond that, it's really down to the US dollar, I think. I'm still toying with the idea that after this pullback is complete, maybe we see a break to new cycle highs. I think we need more information to come out before I can really get behind that. But at the moment, for me, the near-term risks are to the downside. Anyway, hope this is useful. Wish you best of luck with your trading.